What's up everyone, my name's Robbie, this is Robbie and Mila, and today we're talking about Visa. So we had a comment from Jin Shin. I hope I pronounced your name right, but thank you for the comment. And you asked if I could go over AMD, INTC, and Visa. So what I'm gonna do is today I'm gonna go over Visa, and we're gonna see if Visa is a buy in my opinion for myself. If you've watched my videos so far about stock analysis, I'm gonna go over the following things. So I create a stock ranking system that I use for myself. I call it the RIM score, Robbie and Manila score. The score consists of 5 different categories. So first we're gonna go over the Rolex score, which is what I consider to be a quality and trust score. Then we're gonna go over a industry-based valuation. Then we'll look at the industry-based profitability. Then we'll look at the industry-based growth. And finally, we're gonna go over a liquidity score. After we go through all these things, we're gonna go over a discounted cash flow, try to figure out a price for the stock. And then finally, we're gonna do some technical analysis and see how the charts look. So let's go ahead and let's get started. All right, so let's go ahead and get started. Now, question. First off, any stocks you want me to throw through this new spreadsheet I've created, this new ranking system, let me know. I love to hear from you all and try to, do as many as I can from the requests. Also, at the same time, if you want to leave a little comment, let me know what you think of Visa. I'd love to hear from you as well. The first thing we're going to do is go over the Rolex score. So the first thing I'm looking at here is the F score, the Piotroski F score. I'm going to go find that real quick. So as you can see here, we have a Piotroski F score of an 8, so that's a really good Piotroski F score. I like to see a 7, 8, or 9. Let's just quickly see what they got deducted for. So it looks like the only thing that they got a deduction on for Piotroski F score, which the highest score you can get is a 9, so they got a -1. And this was for a higher current ratio year over year, so they did not get that. So that's why they just got a little deduction on the F score. So okay, so far I'm liking that. Let's go ahead and put this into the spreadsheet. We don't have the industry average for F scores. We just put the score here, which is a 5, because the highest score you can get in my stock ranking system is a 5. So if you have over a 7 F score, then you get 5 points. Next thing we want to look at is shares outstanding. You get a 0 if shares are increasing. If shares are decreasing, you get a 5. Let's figure out what this is. So we want shares to be decreasing, and here we have 2017 shares, the diluted shares. You can see 2,395 to 2,188. These are in millions, of course. So shares were decreasing. That is a good sign, so they get 5 points there. So I'm going to put shares outstanding here. The score is a 5 because they're decreasing, and we have a total of 10, meaning we have a total Rolex score of 100%. All right, so next up we have the industry-based valuation. I'm actually very excited because I made the spreadsheet even better. So what I did now was, instead of basing this all on averages of PE, what I'm doing is I'm basing it on deciles. Now you may actually be a little bit confused about what deciles are, so I'm gonna show you a quick little presentation so you understand how this works. So what we're looking at here is a list of all the PE ratios in the construction supply industry. You can see the PE ratios here. These are the tickles. There's 38 different companies. These are just companies that have PE, so some companies don't have PEs because they're not profitable. These are all the companies that are profitable. So as you can see, all the PEs are all over the place, right? They're not organized, they're not ranked. You can of course take an average of all of these, but there's a problem. There's some pretty high PEs in here, so 88, 84, 90. So these big high outliers are basically gonna drive the average up quite a bit. So instead of looking at just the average and then basing what we're gonna do on PEs on the average PE of the industry, I'm putting it into deciles. So that's what this means. The first thing you do, you sort the different PE ratios lowest to highest. Cheapest here, 1.53 is HYLN, all the way up to WNC, which actually looks like it's 8,470. So okay, that would definitely kill the average of this. So what you're gonna see is adding this into deciles is gonna be a lot better than using the average and even using a median. So now that these are sorted, now we break them into different deciles. So these are the different deciles. So for example, decile 1, if you had a PE between 1.53 or 9.94, you're in decile 1. Decile 2, 3, 4, 5, 6, 7, 8, 9, 10. Decile, there are 10 deciles. So if you're in the 10th decile, you have the highest PE ratio, you have the most expensive decile of stocks. So I hope this makes sense. So what we're gonna use these deciles for in our ranking system is here. So if you're in decile 8, you're not gonna get any points. If you're in decile 5 through 7, you're only getting 2 points. And if you're in decile 1 through 4, you're gonna get a full 5 points. This is basically trying to weed out any like really high decile stocks. Let's go to the PE ratio, and we can see the PE ratio of Visa is 44.25. So let's see, where does that fit into the decile? So looking at the decile, it looks like Visa actually is in the 8th decile, so it actually has a very high decile PE ratio, so you're not gonna get a very good score in this. So in terms of PE ratio, Visa gets a 0. Next, we have the forward PE ratio. We have 26.17. How does that look in the decile? So again, they're in a high decile. So 26.17 is the forward PE ratio, and it looks like that is in the 8th decile as well. For the price to sales ratio, we have a 18.49. What decile is that? So for the price to sales ratio for Visa, we have 18.49, and that is in the 10th decile. So Visa's got a very high price to sales ratio according to the industry. Going back, we're gonna put 10th decile here. That gets 0 points. I'm surprised at how expensive Visa is actually. I was not expecting this. So I really go through these like without looking at the stock. So I'm just going through this. So I'm learning as much as you are as I discover these things. So the price of free cash flow of Visa is 38.22. Let's take a look at the decile. Here we have the decile, 38.22. That is in the 7th decile. So actually a little bit better. So 7th decile actually is not going to get a 0 for this one. So 7th decile, that gets a 2. So it got 2 points. So there we go. The valuation, the industry-based valuation score for Visa is only a 10%, only 2 points out of 20. Now we have the industry-based profitability. Let's take a look first at gross margin. So the gross margin of Visa is spectacular at 79.90%. Let's head over and see the decile of that. So here we have gross margin, Visa 79.90, and it is in the number 1 decile. So that is actually very good. So that is awesome. So Visa does have a very good gross margin according to its industry peers. We are going to give this 5 great points there. Let's take a look at the net margin decile. So for the net profit margin here, 50.40 is Visa's profit margin, and it is in decile 1. So it is the highest decile you can get for profit margin. So awesome. Back to the industry-based profitability category. I realized, that the gross profit margin, it's in the 1st decile. I should put 1 there. Net profit margin in the 1st decile. Very cool. We got 2 5s here, so it's actually got a 100% profitability score. So let's look at the industry-based growth here over the past 5 years. So what decile is it? It's 9.80, the revenue growth compounded over the past 5 years. So let's check the decile. So 9.80 revenue growth, where does that fall into? So that's actually pretty good, the 4th decile for growth there, so I like that. Let's go back. 4th decile, that gives us 5 points. Next up, we have earnings per share growth. 13.60 is the compound annual growth rate of earnings per share. Let's take a look at the decile. So that falls under the 3rd decile, really good. So decile 3, score of a 5. Let's take a look at the free cash flow growth. It's actually 13.2% free cash flow growth, so I like that. That gets 5 points. This one is not based on the industry. I just like it to be over a 10. So we got a really good peer growth score of 100%. Next, we have the liquidity score. So what do I have here? Well, let's see. 0.58 is the debt to equity ratio for Visa. We don't use industry average in this one. I just like it to be no more than a 2. Totally fine. So we get 5 points here. So all right, let's take a look at how Visa fared in the RIM score. So we had a 100% Rolex score. We had a 10% peer valuation score. We had a 100% peer profitability score, 100% peer growth score, and a 100% liquidity score. So our RIM score for Visa, out of a total possible of 42, Visa got a 60, and that turns into a 70%. Now I don't like going below 70, so this passes my test for the RIM score. So now let's take a look at the discounted cash flow of Visa. I'm going to use Guru Focus here. So what do we have? We have free cash flow growth over the past 10 years of 18.80%. So let's lead off with that because that's what it's been. If we look back 5 years, 19.90%, 1 year, 63.50%. I don't love going this high for any company. I like to be more conservative with free cash flow growth, but because there have been really good growth rates over the past 10 and 5 and 1 years, let's go ahead and start with this. Now let's make my discount rate 9%. That's the rate of return I want to expect from this investment. We start with 6.838 as the free cash flow per share for Visa, and we have this 18.80 growth rate here. So what we have here is Visa looks to be a little bit undervalued. The fair value we have here for Visa is $239.25. The stock is currently trading for $222.69. So how do we interpret this? So anyone out there that is investing and okay with, let's say, a 9% rate of return, you could say that Visa would be a decent stock to buy right now. Now that is given an 18.8% growth rate. Now for me, I usually will take a look at a few different options. So now let's toggle this down and go to like around 15.8% to see what happens there. And now in the scenario where Visa doesn't grow as much, we now have a stock price that's worth $194 per share. So now it's actually overvalued. Now you could go on the other side of this. Maybe you really think that Visa has a lot of room to grow over the next few years and you think that growth is going to be actually higher. So let's take a look at that. So if instead of 18% for Visa, growth was around 22.8%, now you're talking, you have about a 29% margin of safety. Visa is worth $315 in this scenario. The last thing I want to do, so let's say you're not really going for a 9% rate of return, your discount rate is okay to be lower. Let's say a 7% is okay for you, but you still want the growth rate to be more conservative, maybe towards a 15%. And in this scenario, then you're back to having a nice, decent, pretty much fair valued stock. So either way I kind of look at this, I think that it's fair valued right now, but I also like investing in companies that have a margin of safety of around 25%. So for me, personally, Visa's probably not quite gonna be something I would wanna buy. However, I would say that given the time, let's say I couldn't find any other stocks, this might be a decent stock for me to invest in. But again, for you, if you're a little less oriented for having a higher return, higher growth, you might be okay with buying this stock right now. So taking a look at some technicals on Visa. So if we take a look at this chart, this whole chart goes back to about July of 2020. Now, unlike a lot of stocks recently, Visa broke through its uptrend channel a lot earlier. A lot of stocks that we've looked at recently in this channel, the stocks have broken down through their uptrend line in December, in January, because that's when things really hit the market hard. This actually happened in August. So we have a bit of a different scenario here. So let's go ahead and zoom in a bit more here. The first thing I'm seeing like a slight pattern of inverted head and shoulders formation. Now the main problem with this is that this little shoulder here, so if this is a head and shoulders formation, this is a shoulder, this would be a shoulder, this would be the head. Now this part is probably breaking up this inverted head and shoulders here. So I'm actually gonna say this might not be an inverted head and shoulder. What I do see is a pennant formation, and this actually may be more of a flag than a pennant, but either way it looks like a pennant or a flag formation, which is a continuation pattern, which is actually bullish, meaning that what you can do with one of these things is that you can take the flag pole and you can actually project that up, and that's what might happen with the stock is it continues going higher according to the size of that flagpole. So that could actually look something like this. So if we had this happen, this would be up to 260, so that would be very good. Now, the thing is with what's going on in the market right now, I'm a little bit wary of this happening. What I'm thinking is it's potential that this actually continues in a downtrend, but I would watch this to see if this ends up working out for us or if it ends up continuing down into a basically downtrend channel here. There's definitely resistance in this area. As you can see, this area right here, some resistance, probably 230s. Of course, there's some support down here in the 192 area. So if it does come down here, 192, 191 would be a good place to watch for a bounce if it does get down that low. Besides that, the MACD is kind of signaling an oscillator that's in the red that might start growing, which could end up making this continue down further. As you can also see here, looks like RSI is definitely going down. Now it's sitting right now in the 50 area, so it's neutral, but the question is, will it continue down further, meaning this would continue further. So basically what I would do is I would say definitely possible that this thing continues in a downtrend. This is not really a flag formation. And if that happens, probably 205 and 190. So you could watch those areas for a potential bounce. If it does go up and there's some volume, this could actually maybe turn out to be a flag. And in that case, you know that it has some decent upside potential as well. So anyway, that's all I have for this video. Thanks so much for watching. Hope you liked it. Hope you learned something about Visa stock. I actually did myself. So thanks again. And if you liked the video, hit that like button, subscribe, see future videos like this. And hey, let me know in the comments below if you enjoy these stock videos. I'd love to hear from you. And I got another video coming up on the end screen. You should probably check it out right now.